A big question that a lot of people are asking now is, how do you invest during a recession? So what exactly is a recession and why does it matter? A recession is defined as at least 2 quarters of negative growth in the economy. And even though that we haven't seen 2 quarters pass since the markets began to fall in February, I think that it's really pretty evident that the first quarter had negative growth and the second quarter will probably end with negative growth also. So we are in a recession. And surprisingly, we may not be in this recession as long as the typical recession lasts. My name is Van Richards. I'm a chartered financial consultant and I design retirement plans that can help you avoid running out of money during retirement. Today, I would like to share with you what I think may drive the recovery out of the COVID-19 recession and give you some ideas that may help you to make better investment decisions. About a month ago, I gave my forecast of how the recovery would progress, and it's really been pretty accurate so far. But I think that the rate of recovery is likely to accelerate. Originally, some people anticipated a quick V-shaped recovery, indicating a quick bounce back to the economy. But what we have actually seen has been more like a repeating W-shaped recovery. I think that that pattern will continue, but it's going to be at a faster pace. Now, recently, Morningstar Research has revised their annual GDP projections up to say that the GDP will only fall by about 1%. Plus, even economist and Harvard professor Jason Furman predicted a quicker recovery. To quote Professor Furman, quote, "We are about to see the best economic data we've seen in the history of this country," unquote. And he was referring to the third quarter of this year. Now, here are 3 factors that I think may be driving the COVID-19 recession recovery. The first thing is that the markets were surprised by the coronavirus in February, but the future is much less surprising. Now, I hate to say that it's predictable because it's really not, but more investors are anticipating that it's going to take a little longer for a recovery, and they do expect that there will be setbacks along the way, so they're going to stick with it. Number 2, increased testing and increased testing methods will give the markets hope, and hope is the path to recovery. Several times you may have noticed in the past few weeks that the markets have jumped higher just because of positive news about vaccine trials, and I think that's going to continue. I want to talk more about the market effects of treatments, but I'm going to hold that thought just for a moment. Number 3, lastly, and perhaps most importantly, the recovery will be aided by congressional input, congressional stimulus. It's probably not going to be the entire wish list that the House of Representatives asked for, but Congress will probably put more into the economy. Now, before you jump onto the recovery bandwagon, let's take a look at some of the reasons why the economy may stumble as it recovers. First off, there probably will be flare-ups of the coronavirus, but probably not as severe as it was in the beginning. How states handle those flare-ups will affect the economic recovery. Second, recovery may also be stymied because of the demand for goods being slower. Consumers are weary about spending. And number 3, many of those who are furloughed may become indefinitely laid off. Now remember, a furlough is usually used to just stop paying an employee their salary. They remain on the company benefits. The hope is that the furlough will actually just be temporary and they're going to be called back to work soon. If the recession worsens, some companies may either close or indefinitely lay off employees. Number 4, those with the most money, that is those 50 and over, will probably be more cautious about spending their money. And older Americans do account for a significant part of the economy, and they're more than likely to be frugal about their spending. Lower spending may delay the recovery and even send it backwards for a while. Now, how the markets may look in 6 months it's relatively uncertain, but 2 or 3 years from now, I really think that it's quite positive. As investors look for direction toward the future, It is helpful to realize that the coronavirus has been a notorious revealer of trends and weaknesses too. Understanding these trends and weaknesses, it helps me, and it may help you too in making quarter by quarter investing decisions. I have an upcoming live stream broadcast that will focus on how to invest during retirement. And we're going to discuss in more detail how short-term trends should be monitored. If you'd like to listen in or join in the conversation, come to my YouTube channel at Richard's Financial Planning. You can find it at YouTube, or you can look on my website at richardsfinancialplanning.com. Now, here are 5 trends that may affect the near-term investing decisions that you make. As I go through these, you probably can think of some of the companies that's describing. Number 1, think of e-commerce. It's been magnified tremendously. Number 2, entertainment services like streaming services as well as gaming services have surged during the pandemic. Number 3, the research for new drugs has been revealed and magnified. Where it used to take 4 or 5 years to bring a drug to market, that time has been shortened a great deal to 4 or 5 months. Recent reports show that there are at least 5 vaccine trials going on and 71 preclinical stage vaccine trials. Plus, there are dozens and dozens of antivirals and other treatments for the coronavirus that are being used throughout the world. Number 4, company balance sheets have been magnified because of their lack of liquidity or even their surplus of liquidity. And here's a very surprising one, number 5. Government controls have been magnified. European companies have asked their companies to stop paying dividends and not buy back stock. I hope that you've gotten some value from my opinions. My name is Van Richards, and I'm a chartered financial consultant, and I design retirement plans that can help you avoid running out of money during retirement. If you'd like to talk to me about your situation, you can visit my website at richardsfinancialplanning.com and schedule a time to speak. Have a great day.